Hey everybody, Chuck Barone. Tuesday, March the 21st, 2023. Hold your breath day for the Fed tomorrow. I gotta say, guys, I guess I'm ranting over and over about the same stuff every day. It's this crazy time, man. These markets, they just don't know what they want to do. They're whipsawing all over the place, responding to rumor and who knows what in the hell else. Good thing we have each other. We can go through all of this stuff, parse it, and figure out what the hell does it all really mean. Anyway, as always, before we start the show, I just want to welcome everybody. Thank you for watching the show, for your participation, questions, comments, likes, and shares, even just watching the videos. We appreciate it, guys. Markets today. Well, a wild day on the markets, man. The stock market just had a great day. Started up and it sank down a little bit like it was, not going to be a good day, and rallied right back up. Have all the indexes, nice rally across the board. Dow up 316 points. S&P broader index up 51. NASDAQ up 184. Nice number for NASDAQ. Stock market rallying. The glasses half full people, I guess, dominating the market today. With the banking crisis is over, we've dodged the bullet, and the Fed's going to, has this all under control, and we'll see what happens tomorrow. It's going to be a fascinating day tomorrow, guys. Today, bond yields rise like crazy, bonds sinking. 10-year up 12 basis points, 3.60 on the 10-year. The 2-year really sizzling today, up 25 basis points. And you got to take a big hit to your bond holdings, and the bonds are flying around like that. The 2-year at 4.18%. So it's already now, we're spreading out this yield spread a little bit further. The bond market does not look healthy to me, guys. I can't remember a time when I remember seeing the bond market get whipsawed around like the stock market. It literally turned into another type of casino. The bond market's supposed to be nice and conservative and easy, steady. Not like this. Dollar today, down very small. Basically a flat day for the dollar, 103.24 on the index. Thought it might see a little rally today in precious metals, but nope. Not a good day at all for gold. Gold down $38.40 to $1,940 an ounce. Still a great price for gold, but not the result we were looking for today. Silver is falling just 16 cents, $22.37 per ounce. Good price for silver too. I'm telling you guys, gold 2,000, $25 silver coming soon. Oil today was due for a bounce. It had been sinking pretty bad. Rising today, up $1.86, $69.50 for a barrel of West Texas Intermediate. We'll see if it can now, the troughs have been kind of going down. It was between 80 and 85, 75 and 80, 70 and 75. Now it's kind of down between 65 and 70 where it's been bouncing around. Let's see if it can get back above 70 this week. It's all going to depend on, it's not really about supply and demand so much anymore. It's about expectations in China and geopolitically and what's happening with wars, and tough market right now. People ask me all the time, what do you think about oil? For my taste, it's a little bit too volatile right now. I mean, if you're just going to buy oil stocks, good oil stocks, energy companies, and hold them for a long time, okay, great. That's not a bad idea, because over the long haul, they will go up, right? But if you're a trader, tough market right now, man. Real tough. Bitcoin today, up small, 209.13 to 28,184. Nice number for Bitcoin, man. It's really holding steady. I think this rally is probably going to continue. I've been reading a little bit about it. It looks like maybe the worst is over for cryptos. We'll see. They're due for some good news. They need to have something positive happen that the media can get behind, rather than all this negative collapsing, frauding, and all that other crap. I think if that can happen, once they put all the bad behind them, cryptocurrencies, Bitcoin, I guess the biggest of them, probably leading the parade. News you guys need today, well, today's just hold your breath day, guys. It's the Federal Reserve tomorrow. We'll have Chairman Powell in front of the media. Me personally, I'm expecting the Fed to raise a quarter point tomorrow. A lot of people smarter than me, Goldman Sachs, and a lot of analysts believe the Fed will pause tomorrow. Some of the more hawkish inflation people believe the Fed's going to stay in the fight and raise a half a point because the inflation numbers have kind of been stinky. Going to be a fascinating day to see how Powell handles it. I think that I'm kind of leaning toward the quarter because it feels like the middle ground to me. I think that's where the Fed wants to be. They don't want to rattle these markets any worse than they already have been. I think that, and they don't want to show any kind of weakness in this inflation fight either. I think the quarter, to satisfy all of those different dynamics, probably makes the most sense. You had Janet Yellen out today. Not my favorite person to be out there talking for the government. Not my favorite Treasury Secretary, certainly. But she's just out blah, blah, blah. So now the Powell's going to talk, the money stuff and the inflation. They're going to get Yellen out there on the banking crisis. And of course, all she's basically doing is paying lip service to the fact that the Fed is going to make sure everybody's, the government will make sure everybody's made whole. There's no chance of loss if your money's in a bank. I was looking at this Silicon Valley Bank deal where the federal government rushed in to make everybody whole. And that sounds like a good idea, right? When you think making everybody whole, you have these pictures in your mind of the old movies, the black and whites where banks went under and Ma and Pa, got lost the farm because the bank went under. A little bit different today, right? Where you got $250,000 FDIC insurance. They had $151 billion worth of coverage at the bank, $209 billion in assets. So there was going to be a $51 billion haircut there. But I'm saying this, man, that was the Fed or the Treasury or whoever's going to fork over the money for all of this, FDIC, coming to the rescue of corporations. Not Joe Sixpack, not us, not working people. We don't keep more than $250,000 in any separate account. At least I'm guessing most of us don't, right? So that was just another corporate bailout thing. And having Yellen out there, she's just like the least inspiring person I've ever heard to be doing this kind of work. I don't know how reassuring she really is. But the markets today stepping up. You can see what I was talking about, kind of figuring out this whole bank thing and how it's working and the scam that it is. So now today I saw Jamie Dimon was talking about this old Republic or New Republic or whatever the hell Republic bank that's about to go under. And of course the bigs are all in there, but one of them is going to swallow this little bank up. And that's what's going to happen to all the smalls, all the mediums. The bigs are just going to be in there. They gave them enough rope to hang themselves, exempting them from Dodd-Frank, letting them have, carry less reserves, no stress tests, less stringent requirements, and all kind of fun stuff. And of course, they took every advantage they possibly could, and now the bigs are going to come in and swoop up and buy as many as they possibly can. It's also today news. Home prices falling nationally. The national median price in the U.S. down to $363,000, down 12.3% from the peak last June at $413,800. Here in Vegas, the prices are continuing the slide down the peak. We had 482. We're down to about 412 now, so we're down about 70,000 from our peak, a little bit more than that 12.3%. Rates are staying steady as far as mortgage rates goes. Been bouncing kind of between 6.5% and 7%, somewhere in there, depending on what kind of loan is it and your qualifications. So with rates staying steady, I'm going to believe that prices are going to continue to come down. Even with it down as much as it is, it's still too expensive at these rates for first-time home buyers, which are the the foundation of the market, right? They can't afford to get in the market right now. They're being shut out, essentially. And we need prices to come down a little further, and we'll have maybe get back to more robust real estate market in this country. I was reading today, interesting stuff here. Google launches their AI program to compete with this chat GPS deal. Theirs is called Bard AI. Bard, like Shakespeare, the Bard. They had to hurry up and rush this thing out because, Microsoft is so far ahead of them now, at least as far as getting exposure. I was diddling around on that chat GPS yesterday on openai.com. Go there, check it out, man. It's really fascinating, the things this thing can do. I think that if you can get a glimpse of the future right there, it's really fascinating. Google, solid company, man. I can't wait to see what theirs looks like. I haven't had a chance to look at it or play with it yet. But I'm sure we'll be getting some media sensational stories about some of the weird things it's going to say and do, just like we did with the other program. But this AI here, this artificial intelligence, guys, it's here to stay. This is the genesis of it. This is the Pong, so to speak, right, of AI. I can't wait to see what it looks like when we get to, where we are today. Comparing the video games when I was a kid to where they are now. Imagine what this artificial intelligence is going to look like over that same next 50 years. It's just going to be incredible, incredible technology. And the things it can do are just amazing. It's going to free up humanity to do hopefully better things and not blow each other up easier. But interesting times, living history. Here we go. Now, to wrap things up today, I was talking to you guys a lot about the Federal Reserve, and I've been warning that at these hearings Powell had to do in front of the Congress, and Yellen's been getting beat up too, that you would know the Fed's doing a good job if the politicians are mad at them, right? So now our favorite government dumbasses come out and they want to meddle even more with the Fed. These guys who could screw up a free lunch now want to control everything. Now, the Fed was set up to be completely independent of the Congress, okay? Independent of the White House, not to be swayed by politics, but make decisions that are in the best interest of their mandates, right? Now, politicians have been wanting to meddle in that stuff ever since, even though, like I said, they couldn't find their own asses with both hands and a compass, and they might even not with even a GPS. These guys now want to, listen to this, guys, they want to appoint a new inspector general for the Federal Reserve, appointed by the president and confirmed by the Senate. So this is going to turn into like these Supreme Court hearings where the president appoints and the Senate confirms. Could you imagine how political the Federal Reserve would get if this pipe dream came close to being a reality? Of course, Senator Medicare Fraud is the guy proposing this. This guy has never had a serious proposal in his political career. This idea is just hopefully they're going to choke this thing in the crib. If the Fed gets politicized, guys, if the Fed becomes just another apparatus of a Congress that can't agree on, do we even need toilet paper in the restrooms, it's not going to be good. It's not going to be good. Anyway, tomorrow, guys, is a big, big, big day. We'll have the Federal Reserve tomorrow. We'll have employment data Thursday and Friday. Big doings coming, going to set some direction. Look for that quarter point tomorrow. Probably going to happen around, I think it happens 5:30 Pacific time. We'll get the news. No, maybe, I think that one's 11 o'clock Eastern time, so 8 o'clock Pacific. We'll find out our fate as far as the rate increase. Look for a quarter point. That's probably what we're going to get. We'll go over all the details, Powell's comments, at least what's available when we get on the air here. And we'll be back tomorrow to give you the bloody details. Until then, guys, take care. Thanks.